First video, I'm gonna do multiple examples of these, but the first video won't be too long. But so for me, I'm gonna talk about what makes a point of interest worthwhile to me. Also, I'll be covering order flow mitigations because all that plays a role. And then so in this first example, this is GU. This is the hourly chart. I forgot to put the symbols back on here, but this is the hourly chart. And I'll be focusing on this supply zone here, and then I'll be focusing on this area here, right? So the very next slide I'm gonna show, I'm gonna actually go back and rewind mode and just zoom in on this supply candle here, which is here. So this is GU on the 1 minute chart, now zoomed in. So one of the very first things I like to see in a supply or demand zone is I love to see inefficient price range, an unsustainable range that essentially came either in this case where we had a full body candle, the next candle goes back and pretty much purges that entire range, right? Showing kind of give it kind of creates like a ideal for me if I had to explain it, that the only thing that could drive price back up this quick to induce retail to buy opposite of intended order flow would be banks, right? And in doing that, it creates this inefficient price range that's unsustainable. That then gets purged completely by the next hourly candle, which is printed here. Now, this is the next hourly candle on the 1 minute chart. Now, this is where you have to dive into point of interest, because the thing that got me with point of interest was that when I zoom in, I always thought it was odd that we focus on this candle, the supply, the white candle here, the supply candle there, which would be here, right? But the move that price would come back and mitigate off of, that we would play further down line, would actually be made from here, right? The next engulfing candle from it here, right? So then that's when I started shifting the way of thinking, right? And what I mean by this is, okay, I use this candle to give me a zone, but I don't use it to create my narrative, right? My narrative comes from what happens after that candle, right? Seeing that I got the unsustainable price range, I got an engulfing hourly candle next to it that literally purges this entire range, right? Showing it is unsustainable. Everything is inefficient. The order flow is horrible. There's no mitigations going on here until we reach here, right? But the behavior from here to here is totally different, right? So now if we start putting narrative to this, right, as we can see, in this supply zone hourly candle, we had liquidity here that was ran, breaker structure, potential demand zone, right, that failed. And then look at the mitigations, right? Acknowledge the order flow that has come into the market at this point, right? The bearish order flow. Acknowledge the mitigations. Acknowledge how price is all efficient. Every point of inefficiency has essentially come back to get filled. Every point of supply was mitigated, right? So this is your perfect bearish order flow, meaning that stop putting, when you're looking at point of interest, yes, you have the candles like this that give you your zones, right? But when it comes time to zoom in, put less focus here and put more focus here, right? Understand what this is and what it did. It created the unsustainable range. Price comes back and purge it, but put more focus here. Look at the order flow. Now, another thing that I tend to do is, once I zoom into these point of interest, you can actually create an invalidation point inside of your point of interest, right? So I'm gonna go over to the next slide. I'm gonna clean some of this up a little bit. We're gonna slide over. So we have our bearish order flow here, right? So as I stated here, price has no intentions of going any higher than this last supply zone left unmitigated. Why? Because price above this zone is all efficient. Acknowledge the mitigations, right? And the bearish order flow is intact. So this right here is when the bearish order flow came into the market, right? So I won't price if for at this point here, only seeing, if I was only seeing this move without seeing the rest of this, correct? This right here would be my invalidation point, right? However, considering the bearish order flow here, I would not want this to get interrupted, right? Because say we didn't get this move here and then price had come back and broke back above here. Now the bearish order flow is interrupted. Scalp has now shifted back bullish, right? So from that point, you got your bearish order flow here. Now you, and if we zoom back out to here, I might have went a little bit too fast. You have the last 2 points of supply that was left unmitigated. Now, inside of a point of interest, or I love when I see, when I get cases like this. So we had 2 last point of interest that were unmitigated, that were not mitigated, right? The one closest to the breaker structure built buy side liquidity, right? Price essentially left this point, and I said later creates buy side liquidity. Now, in hindsight, you don't know this, like because now I know it created buy side liquidity after the market came back and reacted here, right? But this would just be me building the case as if I had pointed this out as a point of interest. Now let's dive into it and see what price is actually creating, right? So now if I dived into this and seeing what price is actually creating, then my invalidation point will be here, right? I don't need all of this no more. I don't care about it, because at this point I know the bearish order flow is intact here. Now this is the only price, the only zone I'm worried about. Later creates buy side liquidity. My invalidation points here. So now this is my focus. I'm curious to see how price responds here. I'm curious to see if price will come and tap back and just sweep back in here and go low. I'm curious to see if price will take this buy side liquidity, tap this zone here and go lower. However, what I do know is for this specific point of interest, here, right? What I do know is where the bearish order flow was. The same rules still apply, even if it's 2 days later. I don't want this interrupted for this point of interest to be valid. This does not need to be interrupted, right? So as I said here, I just put this, remember this, 1.37292. And the reason I really like this example was because it really shows that nothing in the market is coincidental, right? Because when you think about the logic of this all, right, this forex is nothing but math. If you go and look up how all the pairs correlate to the DXY, it's one big math formula, right? And you can't bend numbers. You can't make 2 + 2 going to always equal 4. There's no ifs, ands, buts about it. So you cannot bend numbers, right? So that's the one thing I really liked about this example, is because it showed the bearish, you can see the bearish order flow, right? And then the precision. So if we go to the very next slide here, remember this line because it's going to go across how price comes back and taps that very last unmitigated supply, the invalidation point. Now, this is that on the 1 minute. The next one I'm going to show you the 1 hour. And I pulled the coordinates up here just so you could see the precision of it, of the tap. The coordinates 1.3737292, 1.37292, the precision, right? And so just remember that inside of your point of interest, once you acknowledge where this order flow is, once you see the mitigations, once you see price all the inefficiency being filled, price becoming efficient, you can gauge price down to a specific point and set an invalidation point inside of the zone. I don't, if for this supply zone to be valid for me, I did not want price no higher than here, right? And that's not saying that you're trying to catch this. Now you could be a little risky if you wanted to. I personally don't try and catch this. I'm just more so focused on, I want to see how price responds here, right? The see if we hold, if my narrative is correct, right? So then now the next slide, now we're going to focus solely on this 1 hour candle here. Now, post mitigating that zone, another thing that I like about this example is that it gave two different ways to view it. Because if we see if we look at the bearish order flow here, right, you can see how price is going back, filling the inefficiency. We got supply zone created here, mitigation, got some inefficiency created here, fills all of that, right? Price coming back, filling inefficiency. So as we can see, we acknowledge the mitigations. We acknowledge the how prices become, the inefficiency of prices being filled, right? We acknowledge that we now have a breaker structure. So now if we zoom in right here, right, post this breaker structure here, what were the last point of supply that were left unmitigated, right? So we had a supply zone here. And the reason why I like this candle here is because I could see that this is a 1 minute time frame, but on maybe the 30-second, 15-second, there I'm pretty sure there was a body candle in here, because the way this candle closed, I know there had to be buyers in here, right? So during the time, I didn't put this this fee up here to show the 50% threshold, but I did it in this example just so you could see the accuracy of it, right? But within this candle here, right, you can create a narrative again, an invalidation point. I wouldn't want price no higher than here, because if the order there's nothing left up here for price to come back and essentially fulfill. Everything has been mitigated. Price is efficient. There's nothing for it to feel, right? And once again, like I said earlier, I love when I see potential liquidity being built up before. If I have two supply zones stacking over top of each other, the last one closest to the breaker structure, I love when I see it potentially could create buy side liquidity, because looking at this in hindsight, you don't know, right? You would just have, like we said, an invalidation point, and all in this entire area, you would just wait and see how price responds. So if we continue over, just remember this 1.37, right? If we continue over, and it's going to be the very last slide to wrap it up, you'll see how price literally comes back, take this buy side liquidity, and taps right over that 50% and trades off. All right. So the end of the video, starting from here, was more so the reacting to it after price taps your point of interest, how you can react. And this could just vary. It all depends on how you'll want to get creative. But the primary focus of this video is this here. Put less focus here. Just acknowledge that this is giving you a zone. This is like the eye candy, okay? So put less focus here and start putting more focus on, okay, what happened after that? Where did the order flow come into the point? Acknowledge the mitigations, acknowledge the efficient price and price action, acknowledge the last points of supply, acknowledge the potential buy side liquidity, right? It take all of that into account. Stop putting focus here and just running a fee up 50% and just, wishing for a best. And it's like, okay, it taps 50. Well, what do I do now? It's like, okay, you can actually zoom into these point of interest, and there is a lot of narrative inside of them. They tell a story, but you gotta look at what happens after, because this is just the setup. It's all in the play of what happens after, right? So that'll pretty much conclude this breakdown. I got a bunch of these that I'm gonna do. This was a great example that just talks about body candles. The next example will be more an example just discussing like a wick type of point of interest, and I'll do variations of supply and demand. So see you on the next one.